Welcome to my finance partner. In our latest video, we're going to be chatting to you about income taxes and hopefully giving you a better understanding of how the various income taxes work. It's that time of year, maybe there's a provisional tax payment or something approaching, and we often get asked questions around what people should be doing. So in this video, we're going to try and help you understand how the various taxes work, and most importantly, how much it actually means to you in terms of what you pay. So where we're going to start is we're going to start with personal income tax. How does personal income tax work? Well, there are a number of brackets depending on where the income you are earning sits. That'll be the rate of tax that will apply. So over here on my right, I've put up the table and you'll see there are 7 different tax brackets, and depending on where the amount of income is that you are sitting at, you will pay tax. I think the most important thing that we tend to find that people don't understand is that you will always start at the base of 0, and only as the income moves into the next tax bracket, that amount of income will be taxed at that rate. So very, very simply, just to explain it to you, if you earn an annual salary of, let's say, 30,000 Rand a month, annual salary of 360,000 and a monthly salary of 30,000, the first 237,000 Rand of that annual salary is taxed at 18%. Then the amount from 237,000 to the 360, that attracts tax at 26%. So that's how these personal income tax brackets work. Okay? You then do a formula to say, when you add up the total amount of tax that you pay, what does it come to? So if you were to earn income of 900,000, it doesn't mean that your tax is going to be 41%. A portion of that income, from 857,900 to the 900,000, that will attract tax at 41. Other of the income would have attracted tax at 39%, etc., etc. Now, the reason I raise this is because when you're looking at tax structuring, whether it's, do I leave the tax in my business, do I take it out personally, etc., you have to look at what your effective tax rate is to make those decisions. A lot of people that we have discussions with tell us, yeah, but I'm paying less tax in my company than what I'm going to pay in my personal name. So what you need to do is take the actual physical amount of tax that you pay and divide that by your total income for the year to get yourself to an effective tax rate. Why do I raise that? Because I'm going to show you a stat a little bit later in this video, which is very, very important in terms of you starting to make decisions in terms of how do you take that income out. So for those of you that are on a salary and that's your only source of income, that will be how the tax rates work. Now, I'm going to move on to company taxes. So I always find the discussion around company taxes a very, very interesting discussion to unpack, because a lot of people talk about, well, the dividend, I only pay 20% tax, I should take the money out of my company because it's a cheaper tax rate. However, before you can take a dividend, your company will pay income tax. Now, what I've illustrated for you here is very, very simple calculation. If you assume your company makes 100 Rand profit, okay, and you are the shareholder and the director of the business, the first tax it's going to pay is income tax. Company income tax is at 27%, so in this example, it's 27 Rand. Now, if you as the shareholder or owner of that business wants to take that money out the business, you have to pay another tax called dividends withholding tax. That dividend withholding tax is levied at 20% of the amount of the dividend that you declare. Okay, so very, very simply, if you made 100 Rand profit, you gave the SARS their 27 Rand and were left with 73, and you wanted to take all of that money out, you would have to give SARS another 20% of the 73 Rand, okay, 14.6 Rand, and you would land up with 58 Rand and 40 cents. When you do the calculation back, remember what I said to you, effective tax rate. How much tax have I paid divided by the amount of income? it works out to an effective tax rate of 41.6%. Why is this very, very important? Just want to take you back very quickly to the personal tax rates. Your second highest tax bracket, 41%. Your highest tax bracket, if your total salaried income is over 1.8 million, is 45%. The bracket before, if your total income sits at 673,000 to 857,900, is at 39%. All our clients, we tell them the same thing, guys, this isn't by chance. Okay, us accountants, we love spreadsheets. SARS also has their spreadsheets. As you can see, as the shareholder or the owner of the business, to get the money out the business, you have to pay the company tax and the dividends tax. You will pay 41.6% in tax before that money lands in your hands. The next one I just want to move through is trusts. We're going to look at the trust tax rates. Okay, so very quickly, just off the top, a trust is taxed at the maximum tax rate in terms of the personal income tax tables, which is currently 45%. So a trust on any income or profit that it makes, any profit it makes, will pay tax at 45%. There is one very, very big difference in the trust. The trust is able to distribute that profit to the beneficiaries of the trust. Okay? If the profit is distributed to those beneficiaries, they will pay tax in their personal name at the personal income tax rates that I showed you earlier, and the trust then treats that almost like an expense. So I've done two examples here for you to see how this principle flows. The trust has 100 Rand profit. It doesn't distribute anything to any of the beneficiaries. It'll pick up tax at 45%. If, however, the trust distributes all the profit out, okay, it will then have no taxable income, so the trust will not pay any tax. However, the people that have received, the beneficiaries that have received that distribution from the trust, will need to include it on their personal income tax return, and it'll be added to any other income they may have, whether they have a salary, maybe rental income from a property they have or something, and that then gets included in that taxable income, and their tax liability gets determined based on their total income. Okay, so very, very important point to note. There's a lot of people that talk about trusts and they're being very, very tax efficient, and or saying, well, you don't want to have a trust because of the 45% tax rate, which is the highest tax rate. Okay, in terms of how it actually plays out, hopefully this little explanation will give you a little more insight into how that all works. Now, just to wrap up, I said to you I wanted a little bit of focus around the effective tax rate. Okay, so why is it important that people understand the effective tax rate? So up here in front of me, I have two numbers, okay, with the effective tax rate. What these numbers are showing you is that if you took a salary out of your business of 924,000 Rand a year, and that was subject to the personal income tax tables, and you would pay 27% of that in personal income tax. If you leave that 924,000 Rand in your business, okay, it will be subject to tax at 27%. So whether you leave it in the business, okay, or you take it out as a salary, that's the number that you get to from a salary point of view. That has exactly the same tax consequence. Now, what is important to note is that if your salary is going to be lower than this, that effective tax rate will be lower. Okay. Another key point just to mention to everyone is to get to that 27%, Some of that income would have been taxed at 18%, some at 26, some at 31, some at 36, some at 39, and some at 41. Okay, but when you add it up across all of those brackets, that's the magic number. Okay, now why have I put this big number here, 5.6 million rand? Okay, that is the salary number that you will pay 41.6% of tax on. When I spoke to you about company tax, that's where that magic number came from. That's why we explained that to you. As a shareholder, if you leave all the income behind in your company and take it out only as a dividend, that's what it's going to cost you on tax. Whether you take 100,000 Rand dividend, a million Rand dividend, or a 5 million Rand dividend, that's the tax that you will pay. And that's why we calculate this number. Now, the one point to note, okay, is that if you look back at your personal income tax rates, anything over the 1.8 billion you're paying 45% on, whereas the company is at 41.6. So you do have a little bit of play, okay, in terms of taking it out as a dividend. Once you're over that tax bracket, you'll save yourself the 3.4% in dividends tax. Okay, so we shared quite a bit of information just around the income tax tables. Hopefully this gives you a little bit more insight into how it all comes together, and hopefully what you will see from our video is that everything does tend to balance off somewhere. Yes, there are opportunities to pay a little bit of tax. What we always tell our clients is, until your salary is at 924,000, okay, there's no point in leaving money behind in the company. Also, there is no point in taking zero income out of your company if you don't earn a salary and only taking a dividend. You're going to pay so much more tax doing it that way. If you'd like to explore this topic a little bit more with us, please feel free just to reach out and give us a shout. We'll gladly have a consultation with you or help you out with any queries we have. In closing, we hope that you found this video informative and helpful. And as we say, we are here to help you. If you would like any further information, please just give us a shout.